Good morning guys and welcome back to my YouTube channel, and in this video I am going to discuss about a new concept called volume spread analysis in this video. Through this video I am going to discuss how you can anticipate market movement along with volume, especially when price near the support and resistance. How many times it happened that price started coming near the support and it started making a series of doji pin bar candles, and you are in two minds whether it will take support from here and will go up or it will reverse and goes down, and you kept on thinking and finally price left you and gone. Same happens near the resistance. You kept on thinking whether to take a short trade or wait for the breakout, and price started going up and you missed the opportunity. So this happens many times because we are in two minds whether to go long or go short. So with the help of volume spread analysis, many times you can anticipate what is going to happen next, whether it will take support, it will make a breakout, and that is what you are going to learn through this video. That is the how to predict the next candle with the help of volume spread analysis. For example, now look at this chart. Price started coming here and started making series of small candles, bullish candles, doji candles, and you are confused whether to go long from here or take a short position, and you kept on thinking, you are in two minds, and finally price left you and gone. If you knew about the volume spread analysis, what actually volume is telling here, then you could have taken a long trade with the help of volume spread analysis. Volume spread analysis is one of the method to know the smart money activity. When I say smart money, means big hedge funds, big FIIs, big players with big pockets. So this concept of volume spread analysis invented by one of the legendary American trader called Richard Wyckoff. Richard Wyckoff introduced this concept, and he mentioned that market movement can be anticipated by detailed analysis of supply and demand along with the volumes. And Richard Wyckoff is the first one to come with that concept called four stages of market cycle, that is the accumulation, uptrend, distribution and downtrend. And this method is also known as Wyckoff method. If you see any stocks or any instrument, you will see this four kinds of market structure. So through this four market cycle, in this video I am going to discuss how to anticipate market movement with the volume spread analysis, how to predict the next candle, especially when it is near the support and resistance, with the help of volume spread analysis. So watch this video till the end because you are going to learn many new concepts through this video. So now let us jump into my laptop and let us see the presentation to understand this concept better. Okay guys, let us start with the volume spread analysis, how to identify market trend with the help of volumes. Let me start with this presentation. See, there are two main components in volume spread analysis, and the main component, one is price and second is volume. As the name itself suggests, it is the volume spread analysis. Volume, you all already know very well that volume is nothing but it will tell how many buyers and sellers in that particular candle. And volume can be bullish volume, volume can be bearish volume, volume can be average volume, and volume can be above average volume. And when it comes to price, here most important in volume spread analysis, knowing the spread of the candle. Now if you don't know what is the spread of the candle, spread is nothing but open and close of the candle. That is what the spread is. For example, if it is a bullish candle, and if it has a wicks on both sides, okay, this is the wicks, this is the 5 minutes candle. Now if you ask me what is the spread in this candle, spread is where is the open of this candle. This is the open, this is the close of the candle, and this open to close is called spread in volume spread analysis. Wicks is not given important in volume spread analysis. Importance is given to open of the candle and close of the candle, that is called the spread. So when I use the word spread in this presentation, remember I am talking about the open and close of the candle. So that is what this entire presentation will be based on, volume spread analysis. And there are two major applications of volume spread analysis, SOS and SOW. SOS stands for sign of strength, SOW stands for sign of weakness. Remember, this volume spread analysis is not just a strategy. This volume spread analysis will tell you the strength, buyers and sellers strength in the market. Okay, so that's why Volume is alone is not important to take the trading decision. Never take the trading decision based on just a volume. It should be mainly based on the price, and volume can be taken as a reference, but never take the trading decision just based on volume. So volume will tell you the sign of strength and sign of weakness in the market. What I mean by sign of strength? Sign of strength means in the bearish market, when supply gets exhausted, that means sellers got exhausted and buyers come into the play, that is called sign of strength. That means strength of buyers. After a strong bearish market, when sellers or supply gets exhausted, that is known as sign of strength. And sign of weakness, same opposite of sign of strength. That means in the bullish market, when demands get exhausted, that means buyers are getting exhausted here after pulling the price till here. And when sellers comes into the play, when sellers comes and try to take the price down, that is known as sign of weakness. How to identify this sign of strength and sign of weakness on the chart based on volume? That is what we are going to discuss now. Totally, I am going to discuss three sign of strength and three sign of weakness. If you go and read the books written by Wyckoff, or if you watch his videos, you will see that Wyckoff discuss many types of sign of strength, many types of sign of strength and sign of weakness. But if I start discussing all this now, my video is going to become 3-4 hours video. So to keep my video smaller, to keep the length smaller, I will be discussing only important three types of strength and three type of weakness. First thing I am going to discuss is down thrust in sign of strength. What is down thrust? Down thrust is bullish pin bar or doji candle with a small spread but very high volume near the some important support. So that means if you see that market is in the downtrend and when it is making a bullish pin bar. So bullish pin bar or doji. Bullish pin bar doji means spread is big or small. Spread is small, right? Whenever there is a doji or pin bar, spread is always smaller because open and close is smaller in pin bar and doji. But if you see very high volume with a small spread near some important support, that means there is a divergence, right? Why there is a divergence? Why there is a imbalance between the price and volume? Why there is a imbalance and divergence between the price and volume? Because as per the Wyckoff's volume spread analysis, he says that whenever spread is big, that means if candle is big, then there should be volume also big. When candle is small, volume also should be smaller. That is what the volume spread analysis. So when there is a small candle like a doji or pin bar but huge volume, that means there is a divergence, there is a imbalance between buyers and sellers. And that becomes our signal that sellers are getting exhausted and buyers are getting active, because the big rejection weeks, big weeks on the downside, that says that buyers are coming into the play. How you know that? Because of the high one. So that is what I will show you with the chart now, so that you'll understand actually what I mean by that. You can see that there is a bearish trend here. There is a bearish trend, and finally it is making a bullish pin bar with a small spread, right? Small spread because body is small. Open and close of this candle is small. But if you look at the volume, you can see that this volume is above average. Why this volume is above average? If you look at the left of this volume bar, except the opening, you should remember that opening and closing of the market, always volume will be big. Closing, opening, always volume will be above average. After that, volume comes down. But if you see a above average volume, that means the volume of that candle is above the average. You can see on the left, all this candle comparing, this candle have a big volume, right? And spread is smaller. So that means there is a divergence. If this candle makes a huge volume, then it is understood that candle size also big, volume also big. If this candle makes a huge volume, then it is understood. But candle has a small spread, but volume is big. That is the sign of strength. That means buyers are coming into the play. Big wicks on the downside is showing that buyers are coming into the play, and volume is telling you that there is a strength of buyers. and supply getting exhausted and demand coming into the play. Okay, second type we are going to discuss is selling climax. What is the selling climax? Selling climax is extreme of downtrend with a bearish pin bar with a big spread and very high volume, and candle has a rejection wicks on the downside. That means at least 25 to 50% of the candle have a rejection wicks. That is the indication of selling climax. That means sellers are getting exhausted and buyers are coming into the play. That is what known as selling climax. For example, if it is a big trend, right, extreme downtrend, and at the down of extreme downtrend, if you see a bearish candle like this, big body, big spread, that means big body, and also candle have a big wicks, almost 25 or 50% of the body, and same time, if you see volume also above average, that is the indication that it is a sign of strength. That means sellers are getting exhausted. Why sellers are getting exhausted? Because there is a big rejection, big wicks on the downside, and also it is indicating a big volume. That means buyers are coming into the play. So chances of price reversing from here or price at least taking a pause is higher. Not always it is saying that price is going to make a V-shaped reversal. It can be a pause. That means before going uptrend, it is maybe taking a pause. That means it is a end of selling pressure. That means selling climax. That means instead of going short here after a big downtrend, if candle makes a big wicks, volume also big, that means chances of going up or staying sideways higher. So going short is not a good risk reward trade. So let us look at the chart. You can see here big downtrend, right? Almost 6 huge downtrend candles. And you can see that this candle is making a almost 25-30% of the body is a wicks. And you can see that volume also higher than above the average volume on its left. Yes, couple of big volume is there, but if you look at the left of this candle, you can see that there is a big wicks and volume is big. That is the indication that either there could be uptrend or there could be sideways. For example, here also you can see that huge candle but big wicks. But remember, it should be the end of the downtrend. It should not be at the top of the downtrend. It should not be here. And if there is any support along with that, then it becomes high probability. For example, this is a kind of support where price bounced early, right? So going short doesn't make sense here. Maybe taking a trade expecting market to stay sideways or going up is high. Now we are coming to the third type of sign of strength, no supply bar. What is this? In an uptrend, small spread and small volume are a signal of continuation of a bullish trend, but only applicable in the trend, not in the sideways market. That means in the uptrend, in the strong uptrend, you will see that there are small volumes are forming, but same time, volumes also small. Here volumes were big. After that volume getting smaller, that is the indication of the continuation of bullish trend. And that is what Wyckoff says. This is the concept of Wyckoff method. In the Wyckoff method, he says that it is the continuation of a bullish trend. If you see trend is strong upside, candles are getting smaller, but volumes also getting smaller. If you see that volumes are getting higher, candles are getting higher, volume also getting higher, most probably it is the end of the trend or there could be a pause. For example, look at this trend, strong uptrend you can see from the 20 MA, right? So there was a strong volumes here, price started going up. Then you can see that almost till 2 o'clock, market was having a average volume or below average volume, right? And it was in the strong uptrend. And if you look at the candlestick, most of the candlestick were smaller only, and volume also was getting smaller. So Wyckoff says that is the signal of continuation trend because there is no supply volumes. That means there are no volumes which are showing that it is likely to reverse. Now we'll come to the three types of sign of weakness. So sign of weakness is nothing but in a strong uptrend when buyers get exhausted, demand get exhausted, and then sellers come into the play to take market down. That is what nothing but sign of weakness. For example, this entire level is the strong resistance, right? This entire level is the strong resistance. Then market came down. took the support, again started going up, and it started making bearish pin bar and doji kind of candles. And look at the volumes. Here, two candles, especially this candle, made a huge volume compared to left of the candle bar, right? So that is the indication that most probably price is going to come. That is what, if you see a volume which is above average volume at some important resistance, but spread is smaller spread means this kind of small body candle, then it is an indication that market is going to reverse. If you see a huge bearish candle with a huge volume, then there is no divergence, right? There is no imbalance. Imbalance only happens when body is smaller, when spread is smaller, but volume is making a above average volume. Next sign of weakness is buying climax. Extreme uptrend and bullish pin bar with a big spread and very high volume, and candle has a rejection wicks on the top. So that means at least 25% of the candle have a wicks. That means it is most likely to be buying climax. You can see that from here price started going up, volume also started going up, and you can see that this candle made a huge bullish candle with a huge spread, and also it made a rejection candle on the top. And look at the volume. Volume of that candle also above average volume on its left, right? So first candle had a huge volume. After that, only this candle had a huge volume, and this candle had a big wicks. So that is the signal of pause or reverse. That doesn't mean that immediately you will take a short position on this candle. You need to wait for a bearish candle. That's why I said don't take the trading decision based on just the volume along with the price. Both should match. It is not that because of the huge volume and you see that it candle had a big wicks, that means you start shorting position. This may be an indication of reversal. Huge wicks on the upside, that means sellers are coming into the play because volume also is above average volume. And finally, no demand bar, just like opposite of no supply bar. In a downtrend, if you see that spreads are getting smaller, volumes also getting smaller, that means it's an indication of downtrend. That is what Wyckoff says. It's a signal of continuation of bearish trend, but only applicable in the trend. Remember, it is only applicable in the trend. This is the strong downtrend, and here you can see that spreads are getting smaller and smaller, and you can see that volume also coming down, right? It had a huge volume here, then volume started coming down, and from here again volume started getting picked up. Volume started picking up from here. Most probably chances of market going up or staying sideways. Not always indication of going up. It can be a pause. And you can see that selling climax. I was telling you that this is also selling climax because huge volume bar, candle also huge spread, and it had a rejection wicks on the downside. That means it may be end of selling climax. Okay. So that's about this video about volume spread analysis. I shown you 3 types of sign of strength, 3 types of sign of weakness. But one important note before I close this presentation. Remember, I'm being a price action trader. You know that I'm a big fan of price action. So I want to give some important note to my followers. Volume should always be analyzed with the price. Okay. Oh, don't depend only on volume. Volume should always be analyzed along with the price. Don't ignore price. Never take trading decision just based on volume. Just based on volume bar, never take the trade. Price should be given more importance and then volume. So if you ask me which I give more importance, I always give more importance to price. Volume is next. So that is what my suggestion is, that this video is the basic video to tell you more about how volume sometimes can show you the sign of strength and sign of weakness. But first importance should be given to the price. Okay guys, now you have understood this concept of volume spread analysis. Just like any other method in trading, this method also not a foolproof. That means it doesn't work 100% of time. So that's why you should always have your stop loss whenever you take the trade. There is no method in trading which gives you 100% result. If you want to learn volume spread analysis in detail, then you can read this book on volume spread analysis written by Richard Wyckoff. In this book, Richard Wyckoff discussed many concepts about how to read price action along with volumes. So that's it guys about this video. If you are interested to learn more about day trading, then you can check my day trading webinar, that is 25 day trading strategy in Nifty Bank Nifty, which I normally conduct on weekends. Go below this video and see when is my next webinar. If you are interested, you can contact me on WhatsApp or email. Along with day trading, I have a scalping course also, that is 1 minute scalping strategy in Nifty Bank Nifty. Please read FAQ section, and if you think that it is suitable for you, then only you can buy that course. And if you are new to my YouTube channel, go below this video and hit that subscribe button so that you will get this kind of educational contents regularly. So that's it guys about this video. I'll come back soon with a new video. Until then, bye and take care.